Hi trader, today you will be learning about swing failure pattern, SFP. Swing failure pattern is the core principle of most markets in the world, but especially in the crypto market. There are two reasons for that. Crypto markets are heavily over leveraged and there's a lot of greedy people here. So it works really well, and swing failure patterns actually, they are my account builders. They build like my accounts a lot. Because they offer really great reward ratios. They are, if market is doing swing failure pattern, it's usually great reward ratio for your trade. So you risk much less than you can gain. Yes, that's the core principle of swing failure pattern. Let me explain why swing failure pattern works at the start of the video. I'll be showing you the tool as well. First, I would like to show you and tell you what swing failure pattern means. So the swing failure pattern is, let me do an example over here. When you have significant highs and lows in the chart, yes, like this one, this is very important low because we had a really massive downtrend. This was the final low before we changed the trend and turned higher. So very important low on the on this time frame. People around the world are, their education on the technical analysis is they need to place stop loss behind the significant highs and lows in the chart. There is simple reason for that, because if you take out the higher low, you will change market structure and there could be continuation or breakout, which is for you like unnecessary to to have wider stop loss behind that, because it will invalidate your trade idea. So that's the most traders and retail thinking in the world. But oftentimes what we do when we take out the significant highs and lows, we actually fail to produce breakdown. Instead we produce swing failure pattern, which is like you fail to swing over that low or high and you actually bounce up. And there is very good reason for that. So market participants, especially the market makers, the large entities and traders, they know there is liquidity behind those highs and lows. What is liquidity? The liquidity is, when you have shorts and longs in the market, they have stop losses, or they will be stopped out by force when they are liquidated, if they are over leveraged in the market. So these people, the stronger hand in the market, they know when we take out the low, there will be a lot of forced selling from people, who were buying in this small range, for example, but also on the people who were buying in this downtrend as well. So yes, especially from this range, actually, yeah. So they know, and we can actually see swing failure patterns happening. We have a lot of tools where we can see we can see the liquidations are happening in the market. But in this video, I will be teaching you just the visual swing failure patterns without any tools, because that's how I was trading it before I had access to any tools. It was just technical analysis and visual swing failure patterns, and it was already profitable, because first you will understand it visually, and then you can add tools over it, and you can be better. You can actually even predict if you get swing failure pattern or not. So let me show you this example here. So significant low here placed. Yes, after we finished the downtrend, you see market started ranging above. There was nice push up, but in the end we were returning to this point. It was pretty significant low on the chart. We had few more on the left, but let's just focus on this one first. You can also see this low was also pretty significant. There is main reason for that because this was news event and there was high volume of selling, so a lot of people selling and buying in this move here. So very significant low in terms of volume. So I also was watching that if we get swing failure pattern on that, it's what is great on swing failure pattern, it gives you clear invalidation of your idea. If you take out the low edge and you just don't stop and you just continue breaking down with the heavy volumes, you need to focus on other key low or high where might swing failure pattern can happen. And this was especially at the bottom. So yes, and you see what happened. So we took out this low here, heavy push on the volume, so a lot of people get forced out. Also buyers from here, yeah, buyers from here. So many longs were stopped out, and what you started to do when you stopped out so many people, one more note. So when people are long, their stop loss is market order, which needs to be triggered as sell, yeah, so because they need to balance out positions. So all these people were selling, forcefully selling. That's the main takeaway from the swing failure patterns. There is usually forced selling. People have no choice, either with liquidations or just technical stop loss. And after we did it, you also had people who were like shorting. We can see in our other tools, if people are shorting the lows, they are trying to cause breakdown. Who is doing that? For example, it's fear of missing out traders, who are very emotional traders and entering on the big moves when they see like moving the market. And then you also have the breakout traders who are trying to break down market much lower, and they want to participate on these breakdowns. This is not good trading style, by the way. It's very risky. You need to already be positioned in the positions, and you need to let these people do the job, because your reward ratio is super bad. Like if you short here, where you put stop loss, it's gonna be crazy bad reward ratio for your trade. So stay away from the breakout trading. Super risky and not worth rewards. But on the other hand, you want to focus on swing failure patterns, because their reward ratio is crazy. Like some trades can give you most swing failure patterns in their basic giving you 2 to 1 reward ratio. So you risk $100 and you can gain 200. And some swing failure patterns can produce 5 to 10 reward ratio. So it's crazy. Like you risk $100 and you can gain $1,000. And this means like you can also earn for 5 to 10 losing trades. That's what is building your confidence. Yes. That's what is building your account, because it's maximum opportunity area for you. Okay, so we started, swing failure pattern is classified as swing failure pattern when you start to push over these significant highs and lows. Yes, you are starting to push and close. You are watching that on a small time frame, because 1 hour time frame is yes, pretty higher time frame here, but you can watch that on a smaller time frame. What is great here, always stop loss behind the significant swing failure pattern low or high. So stop loss is there. You can see already this trade how great bounce it produced. So you risk around 1%, and the bounce produced almost 3%. So this is showing you reward ratio is 3 to 1. So that's great. Let me show you example on smaller time frames. You also understand why it works so well. Remember one thing, swing failure patterns works much better when we are in the range environment, which is going like my price is going sideways. You see here, sideways. When market is pretty much stable, it finds the fair value for the asset, for any asset. It's more risky when you are in the uptrend and you are trying to, when you are in uptrend, local uptrend or local downtrend, you focus more on swing failure patterns to the downside. Yeah? So you're looking for entries when market is doing pullbacks. It's more risky to, you see, if you were trying to do swing failure pattern on this high, you would be stopped out. If you are trying to do, swing failure pattern on this one actually worked. Yes, so you can sometimes do it, but you just need to be aware it's more risky. It's much better when you have a well-established range. Yes. Let me show you example on the smaller time frame. So this is the weekend. This example will also show you how liquidity works in the market, so you can see the visuals. So this was Friday. Market was pushing heavily out of this support, and we formed the range. And now I'll show you why it actually works the best on the range. So this was the Saturday high, significant high of the day. Yeah, you see I don't place it here. This is the significant high of the Saturday, and we need to place it there. Significant low here of this whole sideways range. And now you see what market did. Market just pierced this high, took out. Look at the volume is spiking. So all the people shorting here, they are, many of them are getting stopped out, as they are, as I told you, they are learned in the textbook of technical analysis to play stop loss behind the high, which is also correct approach in the end, because you can do breakout. Yeah, but as a good trader, we are teaching you in the group. You already had if you were short here, you already had take profit 1, and this stop loss here is not causing you any harm because you already made money. and you are pretty much safe. So you are seeing visual confirmation, so there is nice pierce over this high, but in the end, in same minute, this is also like scalping template, so you can have multiple swing failure pattern trades just on scalping templates every single day. Visually you are pushing down, yes, and it is defining your stop loss well behind the high, and you can enjoy move to the downside. And as I say, it's much better, your win rate will go much better with the swing failure pattern when you learn other principles and tools we apply on the swing failure patterns, such as liquidity, and then we watch the order flow and so on. So yeah, you see what market did here. From this swing failure pattern, you already had so stop loss was 0.3% stop loss, and your reward ratio was, you will be aiming at least point of control of this range or the daily VWAP, yeah, 0.60. So it's already showing you like reward ratio is 2:1 just in this trade idea. And in the end, you can have take profit too when you rotate the range fully and you take liquidity to the downside from these people. And that's what happened. This low was significant. Most longs here place stop loss behind this low. And you see what happened. Again, volume spike, even larger volume spike to the than to the upside. Forced selling, and this is even better reaction. I absolutely love to see when I'm trading the swing failure patterns, the wicks, because the wick is representing the largest imbalance between buyers and sellers. I know the velocity of the bounce was great. Of course, I'm watching that live, but it's also showing you the the strongest reactions. The strongest reactions, especially on Bitcoin, are when we have the wicks. It's the largest imbalance, yeah, between buyers and sellers. Yet again, if you took swing failure pattern here, you are taking major take profit here, and you can also flip to the long because you are getting this confirmation. You are closing above this. It's so key, to start closing back in above this high and not spend too much time, because sometimes you are seeing something like this. So you go here, you go down, sometimes you overextend too much. So for market, it's pretty hard to do big swing failure pattern. Is also like widening your stop loss. So you first of all, you don't want to overextend too much from the low, and you want to extend with the wick. That's what we like. So yes, and also this is bearish scenario for your this is what is keeping you away from the swing failure pattern trades. If you do something like this, so you do breakdown, you retest the previous low, and you continue down, and you are taking this low here. This is telling you this can be breakdown and continuation trade to the downside, initiation. Like you lost this range here, and you are starting to search for the new value in the market. You can see there is not much support here. There was like big push. So market can actually start pullback, but it didn't happen. So swing failure pattern decision making is made. That's what is simple on this. You have mechanical entries, you have mechanical stop loss. You don't think where is stop loss is always behind the significant swing failure pattern, high or low. This is what makes this approach and strategy so simple. And you also need to know when you stay away, and you really stay away when you see something like this. So you break down. So you stay away when you do massive breakdown. Yes. And your reward ratio is getting lower, and it's not looking visually like swing failure pattern. Or you do breakdown, you retest this, you continue down, you break this low, and you're initiating like lower this local downtrend. Yes. Okay. Now let me show you. I will show you. So you see this nice range here, and now I'll be showing you X-ray vision of that range. So let's go to our tool. You will be learning this tool in the hero rank. So, and that's gonna improve your odds of winning a lot with just trading this on the visual basis and volume and technical analysis. So you see we have this really nice tool. It's called Trading Different, and this is showing you where is the liquidity in the market. So you see what is happening here. So we are building volume from the shorts and longs. Once market goes for this swing failure pattern high, you see what we did. We started to taking out liquidity from the most aggressive shorts here, and market stopped where? It stopped where there was end of the liquidity node. So market grabbed liquidity. Yet again, why it works. Now I need to tell you why this works. if someone wants to fill larger positions, some bigger entities or traders or banks, funds, doesn't matter, they also use these tools, and they know if they enter with the market and with big size, they will actually create massive slippage. They will pay huge fees. That's what they don't want to do. That they actually will wait when we are in the range. They will place limit orders here. They will place a lot of limit orders here where they know there is liquidity from these people. And once we started to, they know there will be forced buying here, and they can get on. You see the volume spike here. The volume was really great here. They will get easy fill on their positions. They will save money on fees. Yes, so they will save thousands of dollars on fees, and they will not move the market. If they enter on the market order, they will enter with limit order. So you see what happened here, and you can also watch this. So this is why you combine other tools, and you will be learning them later. So we are watching where is the liquidity nodes, where is potential for them to end, so you can estimate where the swing failure pattern wicks are happening. You are also watching this because we can see the order books. You see there was really significant medium size order, 72 bitcoins on these spot markets here. Same way, look at here, 300 bitcoins on the perpetuals, on the leveraged markets. So you had like small walls here. It was also scattered walls here. So you see, we can actually see in our tools if we have the limit orders in the areas which can prevent us from pushing higher. And we also know exactly where is the liquidity. But you will be learning these tools later. I just wanted to show you how this market works. And look to the downside. These colors represent how big is the node. The yellow and red colors are the best. You already see there was like critical thresholds breached here, and we saw even better. You see, liquidity was bigger because the range to the sideways was getting longer, and especially you see these inefficient lows here. Look at here, higher. This is the low. Now we have the higher low, higher low, higher low. So people are trying to play this uptrend, yes, but also the stop losses are building up from here, from here, from here. But this is the significant low where a lot of people also will have stop loss. So you want to take it out as well. Now the move started happening, and now we're seeing we took out this significant high volume node. It is also telling you like if you want to go back into the range, you want to do it from this place here, because this node was taken out and you want to stay in. But I'm already explaining this tool. You will learn that later. Let's focus on the visual swing failure patterns first. I was trading visually before any tools, the swing failure pattern, so that's why I'm teaching you this in the first video. And only later you will be adding more advanced strategies to it, because also swing failure pattern highs and lows are not equal to each other. That's what you also need to understand. Okay, so we had this example here. Now I want to tell you where we actually really love to do swing failure patterns. I was already mentioning that, but the most profitable ways of swing failure pattern trading is when we are ranging. Let me show you an example here. I have also Ethereum example here, because when you are ranging you can estimate these nodes really well, and there will be FOMO and breakout traders trying to take us out of the range. And if it's fake out, then you have the well-defined stop loss. You see Ethereum, this is an example. So we are in big uptrend. We are in big uptrend locally from 1,400, and now we finally started to go into the sideways mode. First really local range here, that's perfectly fine. No swing failure pattern to the downside, but you did swing failure pattern here on this high. It is there was no volume spike. Also other tools you need to monitor, but it was just visual swing failure pattern. You took some of these stop losses out. Usually it should outstretch a bit more, like this one, but it's perfectly fine. Sometimes you get these very tiny swing failure patterns when you just only pierce a bit, and it's missing, because good swing failure pattern we are watching with other tools. I will not be mentioning what else is like important there, but like liquidations and delta and volume, of course. But you see, this is showing you the true swing failure pattern. Sometimes you also get the, some of them like this one. Stop loss 0.3% and the reward, even if you go here, 5%. So this is crazy. This is like 10 to 1 reward ratio trade. But I'm still, I'm still aware it was just visual swing failure pattern. There was lack of volume here. Very tight. I don't think you stopped enough people. So yes, I know there is massive liquidity behind this. So liquidity is over here, behind this high, behind this high, behind this high. 3 highs together, and now what market is doing, look here. Finally, big volume push. And you need to mark this one now. This is now the highest high from all of these 3 of them. And I will be focusing on the swing failure pattern of this high. Beautiful swing failure pattern. Just push up on high volume. You started closing below this line. Stop loss behind here. And you have well defined stop loss, and you can enjoy again high reward ratio trade here. Beautiful. Now we took out stop losses from all these 3 highs together. Beautiful. That's why in range trading is in well-established range, it's just fantastic. Same thing happened here. Now we will be focusing here. So let me check which low was the lowest. Yet again, you have equal lows. When you have equal lows like this, so this low didn't take out this one. It's very weak market structure. Remember that. It's gonna help you in your trading. Super weak market structure because people were not stopped out from this point and from this point. So if you do so, you're looking for swing failure pattern. And this was more like a liquidity sweep. Yes. This was not swing failure pattern. You need to realize that because you spent too much time behind the low. So there was high risk. You can actually initiate continuation to the downside. But if you manage to enter in this place, this low is really great for you because you already took liquidity from these people, even from here. Yeah, so you took a lot of liquidity from these points. This is strong low. The reaction was great. It was just not swing failure pattern. Yeah, but you still apply these principles because if you return back to this range, finally it was rejections. You finally reclaim this and you are pushing up. You are back in the range. So yeah, swing failure pattern knowledge, is important even in situation like this one. Ethereum, and now let's go back to the Bitcoin. 15-minute time frame. Yet again, well-established range here. Well-established range. You have this high here. Swing failure pattern. And yet again, we took out this high. We spent a little bit more time there, but on higher time frames it was the swing failure pattern. And yet again, you need to apply your liquidity tool to see how much liquidity you taken. And I can guarantee it was we ended very towards the first most aggressive liquidity node, which I was showing you in the trading different. Yet again, as you are returning down, finally closing down, you are placing stop loss behind the high, and you are again playing and enjoying the move to the downside. Oops. And what is happening here? So significant lows here. Significant low here from the beginning of the range, and also this one. But this is the main one. You want to definitely take the main one, and that's what happened. Again, nice volume spike, and as soon as you started closing above, you have well-defined stop loss and you are playing this range. Where we need to be careful with these swing failure patterns are uptrends or downtrends, so where market is moving very impulsive way. In the end, you were learning in previous videos how important is market structure. So you see this is the uptrend. Yeah. You don't actually want to You see there is liquidity behind these lows. You don't want to like damage market too much. It will also like it can change market structure overall. But yeah, I would be even if you take out these two lows here, I would be interested to take it if you do swing failure pattern, because we know there is liquidity here and this low is still safe, but it never happened here. But yeah, that would be my play for the you always plan, like 90% of your trading is planning, so that would be definitely my plan if you take out this. Just need to know where is the liquidity all the time. And you see, when you have well-established uptrend, why it's much more easier trading swing failure patterns. Remember, if you have well-established uptrend, you are looking for swing failure patterns to the downside, so you are looking for longs because you want pullback. So if you do pullback here, I will be interested to take it. If you look here, there was not enough push, but if you would take out this, I would be, and we do swing failure pattern, I would be interested to trade this because it's on the higher time frame is a beautiful uptrend. On the other hand, if you have uptrend and you are trying to fight it with the swing failure patterns and it's not well established range, like this one, this was more local range here. More local range. Now we took out this high, swing failure pattern happened here, but if you are trying to swing failure pattern this one and it's not happening, you are staying away because you know continuation of the trend is getting likely. That's the beauty on swing failure patterns, they either confirm or not. You just did push here, there was no swing failure pattern here. You had swing failure pattern trade here, at least to rotate this range here. And also this high, also swing failure pattern, this was a really big reaction. You just needed wider stop loss, so your leverage was a bit lower, but again, you had. So you see, even in the uptrend, you can have some local swing failure patterns. Just be aware of these breakups are more likely. Let's have a look on 1 minute time frame because swing failure patterns happen here as well. Oftentimes this is like your last. So you see we have very strong downtrend, and oftentimes is the last entry for you to like participate on a trend. Very little range here, very little local range. Meanwhile, you are dropping. So you see we are building this range here. Many highs not taken out for the liquidity. We always watch for the the more highs you build, the better the swing failure pattern will be, because the more liquidity you build up. Little swing failure pattern, tight stop loss, move boom down. And as you can see, if you were, this is 1 minute time frame. As you can see, you are getting more breakdowns in the downtrend than you are getting swing failure patterns as you are bleeding down. Yeah, so you don't want to fight this. Yes, past few days we haven't had much swing failure patterns. Was a bit less. Market was really nicely structured, and we had more breakdowns because it was strong downtrend from the top. Okay, let's continue. So let me show you a bit higher time frames. This range here, where are you? Yes. When was that? 19th of March, yes, so 2 months back. I remember trading this range, it was beautiful. So we know we are in uptrend. That's the key realization for you. So very big uptrend from 20k. Now we are fighting. Now we are starting to range bound, and I already prepared for myself. We had 2 significant lows here. This one and this one. You see what market did here. That's what I'm saying you, the most profitable trading with swing failure patterns are when we have well-established range. So we are building longs liquidity for a long time. Market was not taking it. Even here, yet again, not taken. We finally going down. And this is the best swing value pattern you can get visually on a chart. Volume spiking. A lot of people getting stopped out, but it was not big extension, so a lot of limit walls were here. We could see them in the Tradinglite here. People were not allowing so much breakdown, but they wanted to create the swing failure pattern, and that's what happened. So your entry, you took out these two lows, much better, and it was your last ticket actually to the upside, and boom, up. And now, yeah, you also had entry here as well. Also swing failure pattern. You were watching the liquidity. Again, you need liquidity node here, because this was again perfect liquidity node from these people. You were also watching these highs together, but there was no confirmed swing failure pattern here. Big break up, big break up. That's it, you stay away. Local swing failure pattern of this high. Well defined stop loss, you are trading this little range here. Okay, so I think that was the basics for the swing failure pattern. In the hero rank, you will be learning the liquidity tools for the swing failure pattern, and also not just that. Let me show you. This is a part of the breakdown of the swing failure pattern. So you see we have the visual swing failure pattern here, but you also need to learn how to use order books for your swing failure pattern, because we want to see the big limit walls in the global order books on Binance and other key exchanges, and they will raise our odds. We create swing failure pattern. If there is nothing there, then it can higher the chance it's gonna be breakdown, yes, or you will do like massive market buying. Also, what you will be learning in the hero rank is to see order flow. So you want to see what are the traders doing exactly there. If the new logs are coming after you do swing failure pattern, what is open interest doing? Yes. What are the shorts doing? Because sometimes you are getting people trapped exactly in the wick which is created in the swing failure pattern. We want to see that, because if you do that, it is showing you market is even stronger. It absorbed not just people getting stopped out, but also fresh new positions opening and shorting and trying for breakdown. This is beautiful, because later they can serve as fuel and push market further up. When they will be closing the shorts, they can push market further up. So we like to see that. Then we watch the TRDR tools for the liquidations, for the delta, for the overall volumes, because good swing failure patterns are accompanied. We see liquidations in those good swing failure patterns, and also you will be learning in the other videos in the hero rank. You will be learning how to use this tool as well, so you can see exactly where are the liquidity nodes and when market is finishing its mission and taking out these nodes. Lastly, there is also another video in the hero rank for the classification of swing failure patterns, because these you can mark just swing failure pattern and they are not equal to each other. When you see my folder for the swing failure patterns, you see I have the medium swing failure pattern. I also have the major swing failure patterns. These are which are, if you take out this low, it will change market structure on the big time frame. So you want to see how they are separated, and you also want to see how I'm marking liquidity on my charts, so you understand when you are taking that high where is the end of the node. It's good to be. It's great for you to mark this visually on your charts as well from the tools we are using, especially the medium time frame one. So all that you can learn in the hero rank and other videos. Thank you very much for watching. I hope it was clear for you, this tutorial for the swing failure pattern, and I wish you good trading with it. See you in the group. Bye.